Hi everyone, before I start the video in terms of explaining the game plan, in terms of entry and exit price points for the stock price, I just want to say that in terms of valuation for the company for the future, I still believe it is quite significantly high. The only problem is at the end of the day, we still need to see revenue. And for that to happen in terms of the price range I even give, they need to grow the revenue roughly about 350%, yearly revenue that is. And for that, even my short-term, long-term is more closer to the 3 year. So I just want to be clear in terms of the long-term. It is still quite high in terms of my expectations. The only problem is the game plan that I explained in the video from the past is altered for the following reasons, and because of those following reasons, they've adjusted the future game plan as well, and explain all that in the video. I think this is a pretty good video. I highly encourage you to listen to all of it because it explains a lot. It explains about in terms of entry, market cap, evaluations, exit points, as to why those are the exit points and all that stuff. So hopefully you like the video, hopefully you enjoy it, and hopefully find it informative. If you do, consider dropping a like. But now to the video. In today's video, I'm going to talk about BlackBerry stock because a couple things. First of all, they have earnings coming up, Q3 earnings that's going to be released on December 20, 2023 at 5:30 p.m. Eastern time in terms of the conference call. The numbers are usually released about 15 minutes before, sometimes 30 minutes before, but it's usually 15 minutes before the conference call. Again, that's 5:30 p.m. Eastern time after the trading bell. And given that, plus given how it's people want to know what prices are good to enter at for BlackBerry stock, that is if you want to enter. But at the same time, like always, disclaimer, I'm not a professional, so everything I do share and state is just my opinion. I'm not a professional, so be aware of that, and be aware that I do own shares in BlackBerry stock. So obviously I could be like biased in what I'm saying potentially. But for the most part, I try to stay neutral all the time, even when I'm commenting or posting videos and all that stuff. But just be aware of all that stuff. So not a professional and could be biased because I do own shares in BlackBerry stock and been holding for quite some time. So the first thing is in terms of the earnings, if you want to catch the earnings and listen to the conference call when it's live, just go to BlackBerry Investors Relations website and just scroll down and you'll be able to see a tab here later on. You could listen to it tomorrow actually, because today's December 19th, 2023. So there's that. That's for the Q3 earnings. In terms of information for Q3 earnings, if you want to be aware of what my expectations are and do look at comparisons year over year and quarter over quarter comparisons and look at street estimates and all that stuff, I have two videos. One of them goes over the comparisons with the street estimates and all that stuff. It should pop up right about now. And then the one that will pop up right after is the one that I update my expectations, because on the first time around, I expected that they're going to slightly miss street estimates. But given the additional contracts, so they had 3 government contracts, so on and so forth, within the third quarter, I go over that in the next video and update my street estimates. And I expect, in my opinion, that they're going to beat street estimates, which is going to be significant, and I explain why. That's going to pop up right about now too as well. So if you're interested in that, those are the 2 videos. I would say you still need to watch the first one just to see the comparisons. And then the second one is just basically explaining why they beat it, in my opinion, with the additional contracts. So there's that. Now, in terms of what is a good price to enter for BlackBerry stock, right now we're currently sitting at $4.21 US. Again, this is December 19, 2023. And also at the same time, this is for how the company stands currently. Because obviously, if the company, for example, in the next 12 months decides to not spend their fund, like cash wisely, and then ends up bleeding money and so on and so forth, and then in terms of mismanagement and all that stuff, et cetera, that's hard to predict exactly. But the way the company stands right now and the way they're moving forward, this is what my expectations are for the most part. Now, if we look at current valuation of the company, so if you just you could go to any stock watch list kind of stuff, but I just go to Yahoo Finance, type in ticker symbol BB for BlackBerry, and you can see that the market cap currently is at 2.46 billion. In my opinion, it's a little bit undervalued. Just if you look at the numerical sense. The reason why I'm saying, well, actually a little bit more than undervalued, but the numerical sense, because if you take the revenue and take the multiples, you get a higher market cap than what it is currently traded at. And then again, in this video, I'm going to go over in terms of stock price, entry points, and then the game plan overall in terms of what my game plan is entering and exiting for the stock and all that stuff. So currently at 2.46 billion. at share price of $4.21 US. By the way, this is traded on TSX as well, Toronto Stock Exchange, but I just go over the US currencies. Now, in my opinion, the reason why it's undervalued, not even just in terms of trajectory of the company, in terms of future revenue growth, I'm just going of the revenue that they're getting currently, and not even counting the patent sale revenue that they're getting from the contract that they sold for, like, I think it was about $900 million in the span of something about 5 to 7 years payout, and they got a big chunk within this fiscal year currently, but I'm just missing that. So if we look at last year's fiscal year reporting, they reported for the total company revenue for the year at $656 million. So I'm going to do a conservative calculation of $600 million, even though I think they're targeting about $700 million this time around, again, without the patent sale numbers included. Even though some might say you should include that, I agree potentially in a way, but I just want to be very conservative in my numbers. So if you take 600 million times it by a 6 times multiple, which usually they multiply it by 6 to 7 times multiple, but if you just do a 6 times multiple, that's $3.6 billion. Again, we're sitting at $2.46 billion. And then if you do it by the 7 times multiple, if I'm not mistaken, $4.2 billion. So there's that. Now the question is, what would the share price be at those valuations, right? So good question. So if you take it at $3 billion, the share price would be at $5.13, give or take. At 3.5 billion, I already did the calculations beforehand, by the way. So if you do it at 3.5 billion, you're at $6 a share. US, again, these are US prices. And if you're at 4 billion market cap, then you're at $6.84. Now, if you just want to do the calculations yourself, there's 2 ways you could do it. I'm not gonna lie, I kind of did it a little bit of a quick math lazy route potentially. I just took the market cap that I wanted to go at, so 3 billion, and then divide it by 2.46, and then take that number and multiply the current share price, and you get the multiple. That's the average. But the true way is you're supposed to look at the number of shares available out there, and then multiply it by so take the 3 billion, let's say 3 billion, take 3 billion market cap and divide it by the number of shares available completely, like not just within retail investors, but like that's available out completely, even insiders, and then divide that 3 billion with that number of shares, and you will get a share price. But if you want to do the quick average math way, you could just do what I did and take whatever market cap you're expecting and then divide it by the current market cap, and then multiply that number by the current share price, and you'll get to the share price that you should be at for the market cap valuation that you're thinking about. So there's that. Now, in terms of the price points and entry points and all stuff that I think is fair value, back in the day, I used to make technical videos for BlackBerry stock, and this line still holds true, which is kind of surprising actually. Back in the day, I used to show this line showing from the high peak days of 2008 for BlackBerry stock. Now, obviously, the past performance doesn't necessarily dictate future performance, but it's kind of fascinating that it still follows a trend nonetheless throughout the years. It's kind of interesting. But this was when BlackBerry stock was pretty prevalent in the cell phone market completely, and they spiked up around. The thing is with the graphs, by the way, sometimes they don't show the full details, so it could have been higher than $143, $150, whatever price point, but it's pretty much peaked at that price point, give or take. And then ever since then, this graph touch point has been pretty much capping spike ups. So nothing really much here, but there's been a bunch of touch points since 2018 all the way till 2019. And then if you remember right about here, just going over a brief history, but right about here, BlackBerry Ivy was announced, which was partnership with BlackBerry and Amazon 50-50 partnership. I believe it was like December 1st, 2nd, not sure. We broke through this downward trend resistance line, which was pretty awesome. And then like it was perfect timing. So we spiked up and then we came back down, bounced off the support line of the downward trend resistance line, so created as support. And then we had the whole entire GameStop, AMC, and BlackBerry run up, Wall Street bets, all that stuff. Started running up, and then I believe it was on January 26th, we had Robinhood and other trading platforms stop all buying. You could only sell the stock. So obviously, if there's only sales allowed and no buying, then naturally what's going to happen is if there's no buyers, because they eliminated the buyers, then there's going to be just selling. And if they're selling, nobody's willing to buy them. The price just keeps going lower and lower. Coincidentally, too, I think the same night, too, the Reddit post platform stopped or banned Wall Street Bets Reddit platform the night before, I believe, the Robinhood ban. And then the morning of, Robinhood decided, or in other trading platforms, not just Robinhood, decided to stop the buying as well. So it was, in my opinion, this is just my opinion, a lot of manipulation that was happening because there was a Reddit thing that happened coincidentally the night before, and Robinhood the morning of, and then obviously just a bunch of bashing articles for the whole entire Wall Street thing. But could be justified, could not be justified. I'm not sure. That's to anyone's guess. But then, we spiked up to $30. They dropped back down to $7, spiked up to $20, and then so on and so forth. The reason I'm going through this history, because it's part of the game plan a little bit. Now, and the reason why I'm explaining it too, some might say, because I was a long-term holder, I held before this whole entire thing happened. So before BlackBerry IV, before the GameStop and all stuff. And the question is, why wouldn't I sell at $30, right? Because I made a profit. The reason why I didn't sell is because when I assessed BlackBerry, and in terms of the graph and everything, my original sell point was $30 because there's been multiple times in the past where $30 was resistance. You could see back here in February 2000, August 2005, there's a bunch of times it's just spiked up to $30. But when I zoomed in, the range was basically about $31 to $35. And then right about here in October of 2011, give or take. These are just averages, right? And then it bounced that support at the $34, $35 price point in 2009 and 2008. So given all the moving average and the VWAP and all that stuff, there's a bunch of technicals. It showed that there's quite a bit of resistance at the $30 to $35 price point. But given the momentum that we were getting and that the momentum I saw from GameStop and other stocks, and then later on AMC, I was like, if we just break through this resistance, we're going to the next level, which is going to be roughly about, I think it was somewhere between, I haven't checked recently though, but it was somewhere between $47 to $55. And if we break that, it wasn't so much resistance that I saw at those levels that we would be going up to $70 fairly quickly. So my exit plan was roughly about give or take $70, just because at that point it would be spiking up too fast, in my opinion, given how much revenue we were getting at that time versus the potential for the future. Because what I would assume would be it would be spiking up too fast, and then it would rebalance back down, and then I could get back in for the long term. But unfortunately, what happened was once the Reddit happened, and then the Robinhood. By the way, if some are not familiar, Reddit posts is basically just a community of everybody commenting and all stuff on forums and et cetera, which was the original run-up for the retail investors. It was Wall Street Bets on Reddit, right? So given the freeze on the Reddit forums of Wall Street Bets plus Robinhood, it started going down. Now, seeing the other stocks, and I thought the drop was unjustified given how it could have ran up higher, given example GameStop and all stuff, and the resistance of making sure it doesn't come down from everybody collectively, not making sure it doesn't go down, but the way everything was structured, I was okay, we're due for a bounce. Now we did bounce, right? And we went to $20. So I was like, okay, cool. So that means there is momentum to come back still nonetheless. So again, was holding out for that $30 to $35 price point to break through. At this time, I was still hoping that we were going to break through the $30, $35 because at that time, if I'm remembering correctly, even though Robinhood happened, that whole entire fiasco, and with the Reddit shutdown and everything, AMC still ended up running up still after that. Everything took a hit though. GameStop, AMC, from what I can remember, and BlackBerry, obviously, they did take a hit from that freeze because, again, the buy button was stopped. But then after everything cleared up, I believe AMC still ran up quite significantly, where GameStop ran up too, but there was however, it never reached the same height it did before. So technically, hypothetically, you could look at BlackBerry the same way, where it didn't reach the in essence as high as the original run up. But I could be mistaken for GameStop. I just know for AMC, after the fact, it ran up quite significantly to roughly about $70 to $80. Can't remember exactly. So given that, I thought the same thing could happen with BlackBerry, where at one point it will break through that level, and I was hoping that it would break through the $30 to $35 price point, and if so, we would break through the $47 to $55 small resistance from what I was checking before to the ultimately $70 price point, $77 price point, where I see major resistance there, and I would sell there. Now, that's the past. So in terms of currently, what is the game plan? And there's a reason why I mentioned that. So unfortunately, the game plan at the moment, there's two phases. So the first phase is like technically long term, but it's like the short long term, and I'll explain the time frame for that. And then there's the long term. The problem is with the long term is you get into a situation where it has a conflict where it's like, is it worth the investment time to get a potential return versus investing elsewhere to getting more returns for the same time frame? But the problem is, how much of a run-up will it be in the future in terms of future growth, where the run-up is going to be massive and it doesn't matter because then you technically get more of a return long term here than elsewhere. The problem is that is a very hard question to answer. That's the biggest problem. So I would say I'm going to cover the short term, long term, which in my opinion is probably like, it is still long term though, but it's like 2-3 years time frame potentially. I would say 2 years, give or take, which comes back to one thing I covered a long time ago in one of my videos for BlackBerry stock. So technically the turnaround has happened, right? And then there was a well-known investor named Peter Lynch. So he said turnarounds are very difficult to do to begin with. Most of them are not successful. The reason why I said technically the turnaround has happened is the company, in my opinion, has no chance of going bankrupt the way they're running currently, because they have cash on hand and they're pretty much paid off their debt fully. Especially, it's basically fully paid off as of February to May timeframe in 2024, and they have a low interest rate on that and so on and so forth. So that's not a problem. So given that and potential revenue growth coming up soon from Q3 and Q4, especially Q4, from what John Chen, the old CEO, stated that it's going to be a good one, like it's a big quarter. We don't know exactly why, but we know that it's supposedly supposed to be big. So given that whole entire aspect, I don't see them going bankrupt. So technically the turnarounds has been successful. They're not necessarily bleeding cash, anything. Like, even though the cybersecurity side is hypothetically bleeding cash, but that was justified by dumping money in research and development. But they said now they no longer need to dump that much money into research and development, so the cost will be coming down. So revenue versus minus cost, profits will start hitting on the cybersecurity front, but the IoT portion is bringing in cash and it's generating cash. It's cash flow positive, so that's awesome. So in that sense, I would say the turnaround is successful. But the problem is, so for example, the way Peter Lynch said is turnarounds are not easy, and wait until, so there's two parts to what he said. They're not easy. Most times they fail in terms of turnarounds. And he says, don't rush into investing into a turnaround until you start seeing revenue growth. At the time, I thought when the BlackBerry Ivy system was coming in, all that stuff, so much promise, I was like, okay. At the time, I still didn't see BlackBerry going bankrupt. So I was like, okay, turnaround successful. Perfect. We're starting to see growth, potentially, and it might be a good time to enter. Unfortunately, revenue growth just never came in full throttle. So there's another two parts I want to say to this. So you could technically enter now, right? Hypothetically, let's just say, I'm not saying necessarily this is a good price point to enter. I'm just saying in general sense, you could enter now. But it still technically goes against what Peter Lynch, a famous investor, stated, was that don't be anxious too much until you see revenue growth, right? Which we could potentially see this Q3, again, December 2023, or we could see in March, which is the Q4 earnings. I'm not sure when it's usually reported, I forgot right now, but I guess March 20th, 30th, some time frame like that. Q4 earnings is supposed to be big, so technically we'll see revenue growth there, and then you could wait to buy after that. Now, the only problem is you'd hypothetically miss a potential run-up. But at the same time, from what Peter Lynch said, it doesn't mean everybody's right, though, by the way. I'm just quoting him because he's been successful, right? He says, don't be worried about missing the first run-ups, because if it's actually good and it's actually a growth company, and revenue is going to be coming in, there will be way more growth coming as a snowball effect later on. So I'm just stating that just because in terms of like fundamental wise, right? Now, in terms of good entry points, it seems like every single time it pretty much comes down to this downward trend resistance line and access support. Anytime it bounces on it, it's a great time to enter. And then what I've seen in the past, anytime less than $3 is a great time to enter as well. Now, if you're looking at evaluations from what I went through earlier in terms of market cap and conversions to share price, honestly, I think all those market caps I gave all the way to $4 billion, I think it's pretty much fair to enter anytime. But this is the biggest thing. Well, first of all, again, I'm not a professional. This is all just my opinion. But the problem is the higher the market cap you go, regardless of if the stock is undervalued or not, it will take longer time to get major profits from them. So what I mean by that is it's basic, obviously. Like in terms of, I'm explaining something very basic, probably shouldn't be explaining it because it's very basic. But if you enter at a lower share price, you'll make way more profits versus the higher share price. Because if you enter at $3 and the stock goes $6, you just made 100% of your profits, right? The reason why I'm explaining that is because if you even think that the company is still worth, let's say, $3.5 billion, and I believe the share price would have to be $6 from my calculation last time I stated earlier. So $6, you literally have to go to $12 to make 100%, right? So it's a major jump, even though the market cap is not that much higher from the calculations in terms of like, well, it is a lot, 2.46 billion to 3.5. It's quite a bit of a jump, but it's what I'm trying to explain at is you still have the time, the good entry points, but the way I'm looking at it is any price I enter at below $4 is still good. I've entered quite a bit of positions under $4. Not a lot of positions, but like every single time it was like small chunks, all under $4. Sometimes I would enter a bunch of under $5s as well. And I think anything under $6 to $6.80 is safe. But in the meantime, what I'm looking at is entering anything under $5. When it drops below $4, I enter a lot of small chunks for sure. Under $5, I do too, as well. And then now it gets to the exit play, right? Again, I think all those market caps I gave earlier, all the way to $6.84 for the $4 billion market cap, I think it's fair play to enter at if you're going for the long term, right? If you're looking for the short term, I'd say anything under $4. You can't really enter higher than $4 because it depends on how short term your view is. That's the problem. Because if your view is short term, right now might be okay because Q3 and Q4, especially Q4, is supposed to be big. So the returns could be pretty massive actually for the short term if it actually works out. So if that's the case, I know I'm going all over the place, but then if that's the case, the valuation I would say is anything under $5 and maybe even under $6 is completely fine for a short term potentially. But it just gets risky because nothing is guaranteed. That's the only problem, right? Unfortunately, if we had the numbers, we would know ahead of time, obviously. Like if you had the numbers before in terms of earnings reporting, then you would know for sure how not everything would react, because there's always like some tidbits inside of the report where you're just like, oh, I didn't see that. But in essence, you know how the stock should react in a way. But in terms of the exit plan, let's just say now you decided to enter and it's $4.20, which is it's a good price still, right? Especially if it drops down under $4, which I don't think it will because earnings will be being reported tomorrow. But let's say you enter there. And the question is, what's the exit game plan? And for me, I would say $30. Now, the reason why I say $30, it might even be $29, is because unfortunately, so this was the force for the short term, by the way, which was like the 2-3 years time frame, is because we need to see major revenue and a lot of momentum to pass the 30 to 35. It was like, it might even be 29, but it was mainly $30, $31, $33 to $35 range to pass. And you've seen multiple times here spike ups to that range and just getting shut down here, and then here, obviously, it was $29, but it was not even passing that $30 to $35 price point. So in essence, in the next 2-3 years, if there's not a lot of revenue coming in and not a lot of momentum built up yet still, I think it would be difficult to pass the $30, $35 price point. So then I personally would be selling at that price point. Now, it depends though. If I see major revenue coming in where it's just growing quarter after quarter by massive amounts, then I'm like, okay. And I see a good amount of momentum building up, and I could see that from the technicals, it looks like it's going to break through that $30 to $35 price point range. Then I'm waiting until the $47 to $55 price point range to sell. And I might hold up to $70. It all depends. The problem is, I don't know how fast. It would depend on how fast it's going in terms of momentum and how big the revenues are. Because if it's just momentum, depends. Again, it needs quite a bit to pass the 30-35. And I thought I was going to do that time. That's why I held out in terms of the Reddit and Robinhood time frame for the GameStop and all that stuff, right? Wall Street bets. It looked like quite a bit of momentum where I was like, if we break through it, we will get to the next level. So it would still need to take a lot. So that's basically the game plan. So in short, in essence, the whole entire game plan is entering ideally anything under $4 a share for the stock, and then under $6 is still fine. It depends on how long you expect to hold the stock for and how much of a risk tolerance you're willing to have, and then to exit around roughly about $30 price point. Again, for all the reasons I stated. But again, it all depends on the setting of how everything is. If momentum builds up, if revenue climbs like no tomorrow, then that all has to be adjusted. And how the technicals are pointing to the either upside or the momentum, how it's going, or maybe even slowing down. So yeah, hopefully that answers the question. Oh, and then one other thing too, in terms of technicals, it's just like, it's not like just these lines and all stuff. It's like even like the volumes is very important too. That helps to show the momentum and all stuff. But yeah, hopefully all that makes sense. Hopefully that answers a lot of questions. If you have any questions, feel free to comment down below. I'll try to answer them as soon as possible. And again, I'm not a professional, so do your own due diligence and research before buying and selling. And I could be wrong in all this, obviously. So, and I do own shares in BlackBerry stock, so I could still be biased too at that same standpoint kind of thing. So be careful when you're investing, and make sure that you're aware of every aspect of viewpoints that makes you comfortable in terms of investing and all that stuff. But yeah, thanks again for watching. Appreciate it, and I'll see you guys in the next video. Take care. Peace.